Good morning and welcome back to the Financial Blueprint. I am Eric Hamilton, president of Hamilton Sales Academy as well as Hamilton Estates. Well, we're 4 weeks in on our series around financial literacy. And so what we've been able to do is we've covered the 100 level series. Now it's time to move to step 2. We're going to the 200 level series. So before we get started, let me ask a question. If I were able to say to you and show you a way to take $50 a week and just ask you to be consistent, over the next 20 years, investing that $50 consistently would turn to about $175,000. Would that be of interest to you? What I would ask is, I need consistency and patience. So if you're curious at how that can be done, you are in the right place today because we are going to be talking about the basics of investing. But before we get into that, let's recap on what we've done thus far. So week 1, we looked at the financial beginning, the basics, right? So we started with the plan, keeping it very, very basic and very general. Week 2, we moved into the budgeting 101. Very, very simple. We talked about the 50, 30, 20 rule, right? And then we moved into week 3, which was credit and debit, understanding how to properly use credit to help you do what you're trying to do. And then last time we were together, we talked about our saving strategies. So that was key because we entered the term compound interest. And so compound interest, as we learned, that is our friend. So now let's jump into week 5, which is on what we're going to do for basic of investing. So let's start with this. Why invest? So if you see that little figure that appears I'm standing over, but that is Warren Buffett. He's one of the most known investors of all time. So let's talk about why we invest. So very, very simply, if you think about inflation, if your money is sitting in a savings account, you're losing the value of the dollar. So number 1, we want to invest because we want to be able to beat inflation. Secondly is to build long-term wealth. Number 2, so understand that investing, it's a marathon. It's not a sprint. When you hear people talk about getting rich quickly, that's a different type of investing. That's not what I'm advising. And then lastly, looking at that Warren Buffett, he advises something very simple, is index funds. Historically, they have done extremely well. So Warren Buffett says if he can do it all over again, he would go very simple into an index fund. So we'll get into what that means as well. Now let's talk about some common ways to invest. Let's talk about vehicles. The first is very easy. So there's 4 that we're going to talk about today. The first you may have heard of is called a stock. Think of a stock as a piece, you own a piece of a business. You can call it Walmart, Apple, whatever you want, but you own a small piece of that business. The great thing about it is you don't have to be the one to come up with these business ideas. You trust that these large companies are going to go in the right direction. Stocks are notorious for being a little more volatile, but the returns are typically higher. Now, the second option that you have is what called bonds. Bonds are basically you lending money to a company or the government. Now, so though the advantage to a bond is it's very consistent, right? That return rate is very consistent. Now, and it's low risk, right? But the flip side is you will not hit the highs of the returns that you're going to get from the stocks, but it's very consistent. Now, the next option that you can think about is something that I personally like, which are called index funds or exchange trade funds, ETFs. Think of this as a basket of different stocks and bonds. So if you don't want to have just one, I want to have a basket. I want to have a collection of a few. And then lastly, our retirement accounts. Think of your 401k, your IRAs. Now, here's what I'll say about this. Those have great tax advantages. If your employer offers 401k and they're matching it, I would highly advise you to take advantage of it. Whatever the max is, max it out. Think about the money later. That's free money. So here's a visualization of something very simple. So think of, I'll use the analogy of a tree. Think of your first dollar as a small seed that you're planting. What that seed needs is it needs water, it needs sun. So think of your water and sun with investing is like your consistent contributions. And then you need time for that seed to grow. Think of that as compound interest. That's where the money comes, that's where the growth comes. And then over the course of time, you'll begin to notice that that tree is blossoming. Well, it blossoms, that is time. That's time in the market. So I just wanted to paint a very simple visualization of investing is very similar to a tree. but it will take you being patient, and it takes you being consistent. So, looking at the blueprint tip of the week is what's up next. This one is simple. This one is simple, not very complex. Start small and stay consistent. So, here's what we're going to talk about. Automate your monthly contributions. You want to pay yourself first. Very, very simple. Second step is we're going to reinvest all the dividends or the interest that we earn. Very, very simple. You don't think about the money. Again, think of you're at a casino. You have chips because, if you're passing out your money, folks know that you're not going to spend as much money, but chips seem very easy to manipulate. So we want to reinvest the funds that we receive. And lastly, is I ask you to be patient. Time is on your side. I'll talk about this in a moment, but I would prefer you to have time in the market as opposed to time the market. So let me talk about a real world example very quickly, just a real world that I started with early in the show to get your attention. Now, if you were to take $50 a week and invest it over the course of 20 years or so that's $50 every single week, what you'd be looking at an 11% return, which is just the average over the past 10, 11 years with the S&P, which are the largest companies in America, you'd be looking at about $212,000. That's by simply just investing, just putting that money to the side. Now, if you took that money and said, I'm just going to take it and I'm going to put it under my mattress or I'm going to put it into a savings account, you're talking $52,000. Look at the difference that you're talking about by simply just putting it into a vehicle. Now, you're talking about the power of compound. Now, so this graph is going to show some of this, but if you notice, as time goes along, this is where that you see the growth that takes place. It's an absolute powerful vehicle, but again, I would say to you, it's time in the market. It is not timing the market. Small habits turn into big results. All right, so I wanted to grab a couple audience questions very quickly. So I have a question that came in. So I only have $50 a month to invest. Is it worth it? Quite frankly, absolutely. Small amounts on a consistent basis will pay dividends. But you have to be consistent. The key is getting started. You got to get started. You get started, absolutely, it's worth investing. Second question is, where do I begin? Well, as I mentioned, Warren Buffett is one of the most known and well-known investors of all time. So his philosophy is start with a diverse S&P fund. Now, I'm going to challenge you after this to take some time to go and research a few things. Research the S&P, what does that actually mean? But it's essentially, he's saying, is the collection of the basket, so ETF or the index fund, so a collection of stocks and bonds. That's where he says start. So hopefully those very simple, quick things answered your question from the audience members that sent them in. All right, it's time to take the investment pledge. Here's what we're going to do. I want you to, in the comment section, I will invest X a week starting today. You make your own pledge. I don't care if it's $5 a week, $100 a week, whatever it is, you make your pledge on what you're going to invest. Number two, type into the comment section, I'm in, if you are committing to this pledge. Folks, if we're able to do this right, we're going to see changes in our family. We will see changes in wealth. You'll see changes in your finances. Share the pledge on social media, #FinancialBlueprint. And then challenge a friend to start too. Having an accountability partner always makes things easier. Imagine if you're working out. Everyone loves to have a trainer because that trainer is going to hold you accountable. Now, so lastly, very quickly, so I wanted to walk through what we've talked about. So here's where we are. We're at week 5, which is the basics of investing. This is our current week. Now we've got the second half that we're going. So next time we get back together, we're going to talk about retirement planning. And we'll finish out once we get to week 12. That's the financial goal setting and review. So with that, my contact information is available all over the screen. Feel free to reach out to me with any questions. But for now, I'm Eric Hamilton, checking off with the Financial Blueprint. See you next time.